Hey, 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 hey. This thing working? Is this thing on? It's your guys, it's your boys, Nick, GP, and Cookie. Today, it's great to have Cookie back. Let me get Cookie off mute there. And I still hear the music in the background. So let's turn the music down. I love the Feeding the Ducks. I know that's Nick's favorite track that we have to work with. But anyway, guys.
Yo,
what a month it has been since Cookie's everything bullish to the moon call. And Cookie, I'm not picking on you. I think
but you should. Why not? Go for it.
No, I'm not picking on you. I just think it's valuable to say whether we're in that situation or we have completely negated that. But just looking at the market today, I'm going to pull up the chart as soon as I can get TradingView open. Looking at the market today, we are up a little bit today off of yesterday's massive panic AI sell-off, and I guess that's all you can say. So I kind of got a little liberty of creating a cookie graphic of walking through this dystopian AI robot hellscape to come back to the show. So I don't know. I kind of thought it fit. Cookie loved it, so that's all that mattered to me, really.
Well, that's for a desktop version too.
Yeah, we'll get that to you. There's the cues.
I'll make a t-shirt.
I love it. Maybe we could sell t-shirts, Cookie. What do you think? Do we owe Gemini the profits if they sell well? So, Cookie, this was your triangle that you had up here, and we can go through it in a minute. And I'm sure you'll have charts, but this was the triangle up here, and Nick was like, "Well, what if we do an inverse of that?" Can you guys see it?
No.
Oh, there we go. Here's the triangle, and I sketched it out as great as possible as I could, and perfect rejection off of there. I think our call was right. Was it the 27th of January?
Yeah, I can I'll pull up the chart and we can take a look.
Yeah. Anyway, but Nick said throw this inverse on there, and what do you know? The inverse is holding too. So without further ado, I'll turn my screen off. And Cookie, if you want to share yours, go for it. If not, we can just beat up what we think's going on.
Well, first of all, it's great to be back. It's good to be back. And what is it? A month ago, I was on last time, and what was it we were saying, or I was saying, you're not bullish enough. I picked on Nick, and I picked on JP.
Me too.
I picked on all of you. I'm like, you're not bullish enough, and your beard isn't bullish enough, and your halo isn't bullish enough. I remember all of that. And then all hell broke loose, right? So I mean, actually, pretty much like the following day or the following week. But and the next call that I was going to be on was the end of March, because I made a call that the market would go higher until the 30th of March. And I even gave you a level. I think it was 670s in the Qs or something, right?
Yep.
And obviously we're not there, but we're not at the end of March yet either. But what I thought was, rather than just, because I'm not on StockTwits, I'm not on any social media, I wanted to reach out and say, well, why don't you get me on the call again, and we'll go through where we are. Well, we'll go through what I said, where we are, what might come next, right? And as part of that, I think, it's a healthy discussion, because I do this internally. As traders, we all do that anyway, right? We all evaluate how the calls are going, whether we're still on the right track, but I do it with my group as well. And so it's just part of the everyday stuff that we talk about when we're dissecting what's going on in the market. So I thought, well, why not do that with you? Because there may be some people who would be interested in understanding what's going on. And especially with what's going on with software stocks and some of the others, which took an absolute pounding, right? It's good to just take stock once again. So thank you for having me back. It's good to be here. I'm like wearing protective armor. Right. Because I can imagine there's going to be a lot of people out there who are thinking, oh, he said this, and then this happened, and then all the rest of it happened. And as I said, there's no ego, no pride, no shame in this. And I'm more than happy to just go through what I think might happen next. So
I don't think you have armor on. You just come with that tattered cape on in the image that you won the war. That's what I want to hear.
Yeah, good stuff. But let me just say, I think, clearly the markets have been a little bit unusual, to say the least, over the last couple of months and stuff. And I think, part of the discussion we have today, let's also talk about, why. Well, I think what's important is what's going on, and then secondary, why might that be happening as well? Because that might help us understand what to do for the remainder of the year, what might happen in the next couple of months too. But I think above all, it's really just to confirm whether I still think what I thought, or whether I think anything differently. Right?
Yeah, exactly.
And so let's do that. Let's go through that. And as I was just saying before the call started as well, let's go through it as a group chat. But I'm more than happy to hog the mic, as I often do. But just jump in anytime you want to go through stuff.
I think this edition is going to be more back and forth than what you're usually accustomed to, Cookie, because it's usually so long since we get to talk to you. So this time we're basically rehashing fresh information that's only a month old, right? So if you want to share some charts, or GP, if you want to jump in with GP's thesis that he was telling us about as we were getting ready to go live. However you guys want to roll. Hitting three balls.
No, we're going to double zero. It's good. Boom! Right on the roulette table.
Is this serious? We're going to zero.
Well, the markets will still be only down 2%, but everything else will be at zero. How about that?
Yes. Okay, I like that.
Individual names get flushed to oblivion.
Apple will only go up to 500, so everything can be balanced, and NVIDIA will go sideways for as long as mankind is alive. Yeah, it's. I was actually just looking at the NVIDIA chart from 2023 when it broke out. I think we had you on at that time too, right? And it had just announced quarter over quarter revenue increase from, I think, 6.7 or 7 billion to 11 billion, right? Nearly 100% increase quarter over quarter. And the stock was up 30% on a single day. And then it went sideways for 6 months.
Right.
And then when they announced their quarter, instead of 11 billion, they actually came in at 13 billion, and it still didn't do anything to the stock. I just think about a lot of that stuff in general. I think the Bears had a really great opportunity to destroy us really easily over the last couple of weeks, and for whatever reason, they got to that FOMC low on 9/17, and they just panic covered, right? So this has been a digestion of a monetary policy change since September. You can throw all the other noise in there, but you can see where it tops, you can see where it bottoms. It's been almost in line with each FOMC meeting, right? So that's more of the macro side. But I think right now, Bears had every opportunity in the world to crush us. Like even yesterday, everyone was expecting Monday post OPEX of February, which has been the same as it's been for the last 7 years, just straight down, starting the beginning of a down cycle. And they saved us with, I believe it was Apple yesterday, right? Apple was green yesterday, and NVIDIA was maybe green as well. So yeah, maybe they're still distributing and we still fall off the face of the planet. But right now, the bulls are retaking key levels. Right now, just retook, after rejecting it all morning, just retook the year-to-date lows in the NQs, which is 25.025, which has been solid resistance for last few weeks, basically all of February, and we're just retaking it here. So got to get below levels, got to destroy things. Maybe NVIDIA kicks off the next leg down. I don't know. But right now, the bulls are stepping up, and the sellers are losing the battle, and the buyers are winning the battle for the moment. That obviously can change in a heartbeat, as we've seen every morning where we dropped 200 to 300 points for no reason whatsoever. But yes, so far they're dropping the ball. Even Tesla, Tesla has been destroyed yesterday. It was so weak.
Yeah.
They didn't destroy it, and they love destroying Tesla, right? So.
But I'm surprised that because normally you would say we're in the same range that we've always been.
We have. That was the first thing in the FOMC range, right?
No, but what I'm suggesting is why this time we're in that same range. This time you see it as a little bit more bullish than we're just in the same range we've been in for the last 6 months.
Oh, that simple, right? Like the amount of damage, and so like Microsoft is sitting a couple percent from the 200-week moving average. This is the AI leader. This is the blue chip name. They have a buyback policy. They also have, even while they're spending money, they have a buyback policy. They have a dividend. This is as blue chip as you can get. And then yesterday, one of the prior blue chips from back in the day, we were talking about this before we started the call, which is IBM. IBM just moved like GME, right? Like,
but do you see Microsoft as bullish there?
I don't see it as bullish. I see it as it's been so beaten down that it's going to be hard to beat it down more, right? Maybe 10 points down, 15 points down from here. So maybe 3 to
pull it, show it on the monthly and zoom out.
Microsoft?
Yeah.
I'll get my big bombs out of here.
So why couldn't it move down below that 50 monthly moving average, for example?
It can, no doubt that it can. But
what makes So the question here is, what makes you feel as if that's enough, given where it's come from the bottom left of the chart to where it is now?
You're going to have another catalyst, Cookie, right? This is the thing for all these types of moves. When you have 30, 40% moves, to get the 50, 60% moves in these names, there has to be
no, for sure. No, and so here, all I'm thinking here is, and again, look, remember, I'm as bullish as anybody here, right? I've been on the call for the last in October and January saying we're not fucking bullish enough, but along the way, remember when I drew that, I said we'll go up and we'll go down and then we'll go up again, right? And I drew that on the previous 2 calls. So the question here is whether the pullback that we've seen in the last 2 weeks is that pullback, or there's more to come, right?
Well, so first of all, like even with Microsoft, the highest volume came in about a week ago on Microsoft since 2016, like a decade, right? So you have potential capitulation with a little bit of down movement here and there while it still figures itself out. We know the markets. They can always go down unreasonably more, right? Microsoft can go to 200 ultimately, but where you want to see it hold, where you want to see it, there's a lot of sellers already in Microsoft, and so you'd have to see further weakness, further catalyst to get it down. And
all I'm suggesting here is that you're seeing increasing monthly volume on the chart there. You're seeing price sitting on the monthly moving average. It hasn't done enough yet to say that it's out of the woods. And even if you look at the Qs, it's still below the 20 weekly moving average. It's still below the 9 weekly moving average. It's sitting at the 9 monthly moving average. So, you could argue that, and you're right. You would need a catalyst. You would need, maybe something needs to happen out there for that to happen. Now, I'm just, as I said before, I'm just as bullish as everybody else here. I just remain open to, because the thesis hasn't changed, and this is what I think you probably want me to go through. Has anything changed in the charts that suggests that the outlook is different? And if it has, then I think clearly we need to embrace that and move forward. But if it hasn't, then I remain open to seeing some more turbulence in the short and medium term than maybe what you're thinking, which is that's it, plain sailing for 2026.
Yeah. So I think the trend of
the averages.
Sorry?
You want to show us any update on the charts, or?
Well, let's go. I can go through the same charts, and we can talk about how they look now compared to how they look back then, and what might be different. And remember, my objective here is to make sure that I don't miss anything. Right now, as far as let me just first of all, before I go through the chart, say what did I trade over the last 3 or 4 weeks since I was on? How did I manage my portfolio? I went all cash. I went all cash 2 weeks ago. And I'm still all cash today. except for short-term trades and day trades. And because I haven't seen enough yet for me to, so I don't know if we talked about this on the last call as well, about investing brain and trading brain, right? And so as far as my investing brain is concerned, I haven't seen enough from the markets yet for me to warrant putting all of my, let's say, 401k to work in the market. But that doesn't exclude me wanting to participate on a daily basis or on a weekly basis with short-term trades, whether they're long trades, whether they're short trades, whether they're swing trades, right? But I just haven't seen enough yet. And I'll explain why I'm still cautious going into the let's say, the next 2 or 3 months.
Yeah, 100% agree. You should have heavy cash here because we're at that point where things could break down, right? We're not in the upper range. We're not in the.
Let me give you one phrase that summarizes it. We make money when prices go up, not when they go sideways.
Yep.
Right? So if I put money at risk, I want to see a reward. I want to see a return on that risk. I don't want to have money tied up in markets which are going sideways at the risk that the markets may fall. Now, it's actually a very similar discussion to what we had in January of 2025, before the April massacre. Very similar, very, very similar back then. And I think, if I'm not mistaken, Ben, you went all cash around about the same time before the
last year. I was close to 60% cash. Yeah.
There you go. And that's more than normal, right, for you, I would say?
Yeah. I'm normally fully invested. I might have 10% cash if I'm ready to put something new on.
So as far as the situation is concerned, from a technical point of view, and we'll talk about the macro and the funders and what might be driving this in a bit as well. But as far as the technicals are concerned, they're the same as they were January, February of last year before the market fell apart. The catalyst came along for sure, but as far as the technicals were concerned, they were leaning cautious, if not bearish, right? And the reason I say that is because the weekly moving average had flattened and rolled over, they'd crossed. And that's always that's never really a good sign at the index level, right? When the weekly moving averages begin to flatten and roll over. And that's where we are right now with, let's say, the Qs. Now, the reason why SPY is a little bit different is because, of course, it's impacted by all the other stronger sectors, which tech isn't, right? But let me go through those charts. Maybe that can explain it. And I think we're not on a different page here, GP, right? It's just, you see it as, well, if the correction was going to happen, so much blood has been shed, indices hardly moved, that's it. Whereas I say, but hold on a second, it could still happen because the indices haven't yet recovered, and that they may be the last dominoes to fall.
Yeah, and Cook, you fully understand that. And right now, I would say I hear that from the majority of people. So maybe they're positioned bullish, but they're worried with puts or whatever it is. But if that's the case, that we go up and out of this, there's going to be a lot of people off sides on the positioning, right? Ultimately. And so the wall of worry gets climbed and all that other stuff. So I'm open to either scenario. I'm literally, I think we talked about this a couple weeks ago. I think I'm 80% cash, right? So like I'm not.
So I mean, so the funny thing is that we all outwardly say we're bullish as fuck, but inwardly we're cautious and we're holding cash.
I bought yesterday. I added the positions yesterday. I plan on adding the rest of the week.
Good. No, you should. And I think, well, we're talking about this week, not 3 weeks ago or 2 weeks ago or 4 weeks ago, but clearly there's been a washout and you feel like now is a better time to buy then. So that makes sense, right? It doesn't make, it makes more sense that you say that you did that today and not 2 weeks ago, obviously, right?
Yeah.
So let's go through the charts. Let's go through this because, again, so one of the things that I think I do reasonably well is be completely impartial and unbiased with how the technicals look, which I'm sure you guys do too. And so if at the end of today, QQQ is at 617, 618, 619, I'll be all in. I'll be all in again. In other words, there's no reticence to get back in. It's just I want to see certain hurdles taken out before I put that money to work, because I don't just want to see money going sideways and then wake up to a 500-point drop, right? And it's the same as I guess last year as well. So let me share those.
Can you start with the MAGs first? MAGS, the ETF for.
No, I'm going to start with the Qs first. Let me go through. No, well, let me go through, because I don't have a chart for mags, but let me go through the Qs. And
Which is why I wanted you to look at it. I want that raw emotion from it.
But we can take a look through Tesla, we can take through NVIDIA, we can take a look through Micron. I've got all those charts, so we can take a look through all of those. And also what I would suggest is if there's any requests, I'm more than happy to look through any of those charts as well. And, you know, we can
before we go any further, all I've heard from Nick is a ha 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 in the last 20 minutes. So hi, Nick. It's good for you to be on the show today.
Yeah. Yeah, I'm great today. Hi. Happy to be here. I did have a bit of a, interestingly, I did have a bit of a mental breakdown this morning in my meditation. And usually, like, it was kind of like that feeling of like despair, boredom, apathy, like it was kind of all wrapped in one. And I don't know where it came from, but I can say that when I have felt this way before, it has been pretty in alignment with at least tradable bottoms. Whether or not we do fall out from here, I guess, you know, we'll see. But yeah, hey, happy Tuesday. Cookie, happy to have you back on. Yeah.
Sorry, Nick, I didn't say too much to you at the beginning of the call either, but it's always great to talk to you too, man.
No, yeah.
All right. Can you see my charts?
We can now.
Okay. All right. So I want to take us through basically what we looked at last time and why nothing has changed. I mean, really, nothing has changed, right? And so I think that's the best way to really answer some of what the people asked you was, well, you know, has the thesis changed or is it doing anything different now? I mean, what's changed is that this weakness came earlier than I expected. Clearly, right? Because when I was on the last call, I mean, I gave a couple of stop losses, for example, for Ethereum, and that I did say, if I recall, that QQQ would need to hold a 20 weekly moving average. We talked about the shit storm that we could have in the Qs. We'll go back to that weekly chart in a second. We'll take a look together. But other than that, this is the same chart that we looked at on the last call. The only thing I've added is, let me get rid of that to begin. This is how it looked. This is how it looked when I was last on the call about a month ago. And let me just put that back. And this is how it looks now, right? So one of the things that we talked about on the call last time when I was on was, remember I gave you that insight into how to manage prices when you see lower candle lows, that prices will go sideways until the 9 MA. Remember that? Well, that's what happened with the Qs. It happened with, it's likely to happen with SPY too. But so here are the candles, here are the monthly candles for the Qs. And then as you see now, it's finding resistance along this top edge of this channel, which it has done for the last 4 or 5 months. All right. So one thing that would clearly get me a lot more bullish is if we are not inside this channel anymore, right? So that's above 634. Right now, that could happen tomorrow. It could happen with earnings results from NVIDIA. It could happen for any other reason. It could happen because Trump tweets out some tax rebates or some
State of the Union tonight. So who knows?
Who knows? Anything could cause that, right? And I'd love that. It would be fantastic because my original thesis was that the markets go higher until, hey, can I draw on this? How do I draw on this? Oh, no, I'll find a way. This way. My original thesis, which hasn't changed, right, is this way. Here we go. Right, okay. So the original thesis is that the market would go higher until that area that I've circled there. Can you see it? I don't know if you can see that. It's not very bold.
Yeah, zoom in a little bit.
There you go. Right, so this area here, so my thesis was that we'd go higher till there. And this gives you the 670, 680, this area around about there, right? And where that idea came from was that the market tends to move, despite all the hysteria out there, in very, very similar gradients. This is the Qs on the log scale. Right, so over and over again, except for the bear markets, except for the corrections, it tends to move in this sort of parallel direction, bottom left, top right, right. And so I was looking for the corrections to happen somewhere around about here, right? So as far as the original idea, which was that we do see corrective moves at the edges of these channels, that's still there because we haven't crossed the channel yet. right? Now, between now and May, I don't know what's going to happen in terms of like catalysts and stuff. We didn't expect 3 weeks ago that Claude Code, or whatever, however you said, was going to have the impact that it did. Right. So, and maybe in the same vein with developing AI, there's other things that could affect that. But I hear what GP said, which was with all of these tech names getting hammered, QQQ didn't go down any further. But I would argue that we don't know if the move is over yet. So for now, one way in which I would argue, and remember, my base case is that we go higher to there. So here I am trying to argue a short-term bearish case, but the overall idea hasn't changed, which was that the market goes up, it corrects in Q1, Q2, and then it goes higher again forever. Well, forever, for a decent period of time.
So Cookie,
Right.
quick question. Are you, like, when you're looking at this, like, are you looking at what the SOX is doing? Not SOX sold, but the SOX itself, the Philadelphia.
I look at SMH. I look at SMH.
Which is heavy weighted to NVIDIA, TSM, and Broadcom.
Yes.
But if you look at SOX, right, that's all of them combined together. And until this week, it had posted 10 straight green weeks.
No, for sure. And semiconductors have been the strongest sector in the market. Everybody knows that. Right. So semiconductors, industrials, utilities, they've all been very, very strong.
There's quite a bit of risk on pockets, is I guess what I'm saying.
Right. But we're not arguing whether I'm bearish here. We're arguing whether I think, or we're discussing, let's say, we're debating whether I think that the market might still see weakness ahead. I'm not saying I'm bearish.
Yeah.
Right. So I mean, so nothing has changed since when I was on last. The only thing is that we have had a serious move down in some of the market, which wasn't forecast by anyone in the group last time we were on. It happened, but it happens at a time when I'm expecting the market to remain or to be weak during Q1 into Q2, right? So nothing has changed there. Now we can discuss which of the sectors in the market are strong, hey, I think the market is a bull market. Why wouldn't I think that? I'm not on here as a token bear saying the market is bearish. I'm the one who coined, you're not fucking bullish enough, right? So, and I want to make that clear because I don't want this to sound as if I'm coming on here pretending, acting out the token bear, which I'm not. I'm just suggesting that nothing has changed, that I'm as bullish as ever, but the market could experience continued weakness between now and, let's say, May and June, because nothing has changed. It could change for the better, but nothing has changed yet, right? So that's it. So let me just, shall I continue going through it, or GP, do you want to go?
So I understand what you're saying, but I'm assuming you have a lean, right? We as traders try to remain as neutral as possible. And like, so when you see, like, as I was talking about, is when you see all this damage that's happened underneath and the indices can't roll over, your lean has to be that, or so at least for me, is that the lean is, even though the indices are flat, the lean has to be a certain way. So you're leaning a bit more bearish short term, even without them. I guess that's what I'm saying.
My lean is, I'm waiting for an opportunity to come along to buy the dip.
Yeah. And so what happens when we don't buy the dip? What happens if we don't buy the dip? What happens if we go from here and we close above all-time highs this week?
Well, no, I'll be in there.
Buy the breakout.
I'll be back in the market before then. This is what I meant by being open to weakness, but not necessarily being stubborn, so that if the market shows me technicals which are bullish, that I'm going to walk on by.
Okay.
So I mean, I don't know why you're thinking that I wouldn't adapt to what I'm seeing. I mean, I'm adapting now to what I'm seeing because this wasn't foreseen last month. I mean, surely nobody saw this coming last month.
I don't think that you're not adapting. Sorry if it came off that way. I just meant that, even if we go all-time highs this week, the flattening of the moving average is not going to change.
No, but once we take out, if you look at what the QQQs have done historically, right? If they've been below a 20 weekly moving average, even if it's flat, but then retaken it, that's tended to be bullish.
Got it.
Right? So basically, I'll be back on board as soon as, and the 20 weekly moving average is at 614. It's hardly 10% above here. Right. So again, put things into the relevant context here, right? All I'm suggesting is that I still think that the market has not yet done enough to suggest that we're going to go back through 630, 640, and then to 650 in the Qs. Now, if we do that, I'm okay, because that was my original base case anyway. Right. So all I'm suggesting here is that the market went up. It should have gone to this area, but instead it's showing weakness earlier. If this weakness that's appeared earlier is negated today, tomorrow, next week, then that's the original base case. Right now, the only difference here is that you seem to think that this may be like some sort of a really tough bottleneck that I'm not willing to. I don't know. I'm not really sure. But for now,
I'm not. I'm asking questions for our viewers. Right? There's some questions in the chat.
I understand that, but it's good for
you cash and stuff like that. So I'm just asking so they can understand how you deploy your cash.
No, good, and it's good for me to be able to explain what's changed and what's the same as what it was before. And again, "You're not fucking bullish enough" was coined by me, right? And I'm still as bullish as ever, but I just think the market might pull back a little bit before then. Let me continue and tell what happened, because you're not going to get very far if I just end up debating this one chart with you. But let me just do that. Yeah, go on.
No, I was just laughing. Go on.
Okay, let me just get this back. So as far as the monthly chart is concerned, clearly we could break out, we could break down, and I'm open to either of those outcomes, right? Now, as far as what I would love to see, right, and this is why I'm still a bit hesitant. So this is what I would like to see as far as Bible dip is concerned, and you're gonna be completely shocked, right? Let me just zoom out a little bit because it can be easy to see. I'll come over here now. Whether we get what I'm going to draw now or in May, this is what I'm looking for, right? So in terms of timing, whether this morphs into what I'm looking for now or whether it happens later on, this is what I'm looking for. I'm looking for something like this, something like what happened during COVID, right? And if you look back at what happened in this chart in 2019-20, notice this period here. You've got the end of 2018, and then you have a similar move a year later, right? Either side of the same, basically, either end of this blue space here, which is what we're seeing here. So you've got the first bookend and then the second bookend on the right side. So as far as the move I'm looking for is that's what I'm looking for. I'm looking for a 15% move down, maybe even 20% move down in the Qs. The only question is, from where does it begin? Does it begin at 605, 610, 615, or does it begin at 660? And, again, this is the same as what we discussed on the call last time, which was I'm looking for a round trip, up, round trip, and then go higher, right? So there's no change there. And again, if the technicals evolve so that looks less likely, then that's fine. But as far as what I see right now, nothing's changed, right? Now it could, but it just hasn't yet, right? So I remain cautious. Now, also one of the things I mentioned earlier in the call as well, which is I'm day trading. I'm day trading, and I'm doing short-term swings. I'm still doing that, right? So where the market is showing strength below levels that I'm looking for, I'm long there, right? So I'm not going to miss anything. The only thing that I'm not deploying is my, let's say, long-term savings plans, where, and the reason why I'm doing that is because if you miss 3% on a retirement account, 3 to 5%, doesn't really mean much, right? But if you miss 3 or 5% on the short-term swing, then that can mean a little bit more, right? Because you've got time in your retirement accounts to catch up, 5 years, 10 years, 15 years, right? That doesn't mean a lot in the short-term things. But if the market was to correct 15%, then clearly I don't want to have those retirement funds at risk, right? So that's what I've got there. Let me go to a different chart, because I want to show you on the weekly chart how things break out. I want to go to the weekly chart, which Ben you had with the wedge triangles.
Yep.
Let's do that. Let me get rid of this. Let me undo all of this. The one that I said, it's all so colorful and it's really a mess and stuff. But just to like the takeaway from from this would be that nothing's changed, right? So those of you who are asking has anything changed, or are you thinking anything different? Nothing's changed, and it could, right? But right now, the only thing I would suggest that's changing is that the weakness is sooner than what I was looking for, right? And if this ends up replacing that, well, I guess we'll find out in the next month or two. But for now, there's really not a lot of change there. Let me go to the weekly chart. And so this is one that we looked at last time with the wedges and stuff, right?
Yep.
And so here's where I want to get rid of this one for now, because it's going to just make it a little bit easier to explain, right? So, I mean, the market is so crazy at being millimetric. I don't know if that's the right word, precise, in terms of drawing people in and pushing people out, right? And what I mean by that is, so here you've got that famous wedge. Now, when I was on the call last time, do you guys remember when I said that this is a whole shit show and we're going to get the same again? Do you remember that?
Yep.
All right, Nick, you remember that? I said, oh, it's going to be a shit show and we'll get the same. I'm sure we'll get the same again. And we did. We got the same again at the same place at the same time. So it was on time, right? The only thing was that shit show developed to be a little bit shittier, right? So in other words, as far as the technicals are concerned, as far as the patterns are concerned, it played out just as I expected it would in this area of the chart here. Now, what was worrying this time, or let's say more concerning this time, and this is, in the end, it ended up being far more serious for the software stocks, right? But in the end, what was worrying was the fact that, let me make this a little bit easier to see, is that you have this failed breakout of the wedge there. I'm pointing to the top right. Hopefully you can see it, this area here. Right? And we have seen failed breakouts of that wedge before, like this, at a time when the moving averages come together. Right? So when the moving averages are flat and coming in, we have seen the failed breakouts, right? Now, what would make this better is that we retake the moving averages. We retake the moving averages. This becomes a failed move on the lower side, and we ride off into the sunset. We go to 650, we go to 660 in the Qs, the same as the base case. Same as the base case, no difference, which was this one here, right? So the base case was that we come down, we have this shit show here for 3 or 4 weeks, which is what we're seeing, and then we continue higher for 2 or 3 months, right? So that was the base case. Now, because how this has played out has been more bearish than what was, let's say, permissible by that downtrend line and this breakdown over here, then clearly you've got to lean more bearish in the short term. And in the end, during this period here, is when all the software stocks got slaughtered. Bitcoin broke down, Ethereum broke down. They broke down. I mean, what was strange was that, I think a lot of people have noticed how software and crypto have traded together pretty much, right? But it was unusual that software and crypto would move down so much without bounces along the way, that they were so weak. I mean, they were like, you hadn't seen that sort of weakness except for, like I said, COVID, and maybe even worse than that. It was unusual. It was very unusual, to say the least. So having spotted this excess weakness over here, it did have repercussions in the market. It certainly had repercussions in the software stocks, and it certainly had, and so, and we saw the breakdown in Ethereum, for example, right? Now, let me just zoom in a little bit. Over here, right? So, and again, open, just like you are, just like all of you are, open to all outcomes, right? But I just want to make sure that I don't want to leave any stone unturned, so that if things continue to deteriorate, it didn't come as a surprise to anybody. If they go higher, then also that won't come as a surprise to anybody. But this is what we do on the Sunday call. This is what I do every weekend, which is, this is what the charts can look like. If this happens, then that, and if that, then something else, right? If then that, right? Now, and so right now, if we take a look at where the charts are, where QQQ is, I'm just saying we had a strong couple of days. It's just stopped exactly where it should, which is on the boundary of this same original wedge that it lost 24 hours before NVIDIA reports. Now, it stopped at 608, which is short of the moving averages. So as far as putting money to work is concerned, I would consider an early entry at 608, but I wouldn't get anywhere near as excited unless we took out the weekly moving average. Now, clearing 608 would be a good first step because it would be a failed breakdown. We've seen a failed breakdown to the left. That's why you see this yellow area here, right? So there's a failed breakdown to the left. We go all the way to the other side. We could go all the way to 618, which is where then it would again try and leave the wedge that it's been in since the middle of October, or the highs that were made in the middle of October last year. So again, just going back to the point I was trying to make earlier, which is that yes, this is a good bounce of support, but it hasn't done enough yet for me to say this is it. Now it could do that today, it could do that tomorrow, and I'll be all in. Right. Also notice here that this is the projection for the 9 monthly moving average in March. 608 is where the 9 monthly moving average will be in March for QQQ. Right. So what you find here is you've got QQQ coming down below the 9 monthly moving. So the 9 monthly moving average in February for QQQ is 597. Maybe it's 598 now. Right. So we come down to the 597, 598. And then on that bounce from there, we're rejecting, or we're stalling at where the 9 MA will be next month. Now the 9 MA is rising, so that's why it's going to be a little bit higher. I'm projecting that, right? So this could end up being a back test of the lost 9 monthly moving average, which is what many of the tech names did before they then went on to the 20 monthly moving average, which is all the way down here, right? So at least as far as identifying risk is concerned, which is what my job is identifying where the risk is. There is still risk here until we clear the wedge, but an early sign to a potential move to the edge of that wedge would be back inside the failed breakdown at 608. And that's exactly, I mean, can you say just stop there? Why do you think it's done that? And I can show you charts on 4-hour timeframes where we have shown where the market is likely to go every day in the morning and in the afternoon, based on the VIX and based on ES. And it goes there to within cents, within a dollar, within points. None of this is random. None of this is because buyers stepped up or because bulls lost the ball or because bears lost the ball. It's all programmed. It's all completely programmed, which is what I say every time I come on here. And so when we see what looks like strength, it's not strength. When we see what looks like weakness, it's not weakness, it's just the programs, it's just the algos. And these algos can move any volume, they can move any size company on a dime. Right? I mean, I'm not going to show you my VIX chart. I'm not going to show you the VIX chart because it's going to require just too much to explain it. And because it's weird, it's really, really weird. But the VIX moves in cycles. And every day we're able to show you where the VIX is likely to stall and where it's likely to bounce. And this movement that you saw today is a result of that. It's exactly as a result of that. And so this is why when we're looking at the technicals, it's more through the lens of the algos and the computers want to shaft you. They want to try and get as many of you offside as possible before you see that directional move. If you look at what the market has done here, so right now it's an inside candle. We haven't even taken out last week's high yet. Right? So I mean, if we took out last week's high, then I would say that's actually quite interesting because if we take out last week's high, we will definitely go to the 9 MA. We're not far away. So last week's high in the Qs was 610.35. This week's high is 608.91. It's $1. Why did we stop there when so much strength this morning? Why did we just stop there? Right, so because there's a technical reason for it. There's a weekly high that's stalling there, right? And again, so my objective here isn't to say we're necessarily going to go to 560 or to go to 510 or even lower than that. My objective here is to say, objectively, when does it make sense to deploy the cash? Looking at where we are from a technical point of view, right? And there's zero bias in there. There's zero emotion in there. It's purely technical. And what I love about this is there is absolutely no emotion in there, right? The only reason I get a little bit passionate on the call with you today is because I want to make sure that I'm able to get across the points. That's it. There's nothing else other than that, right? So shall I take you through some of those charts? Let me take you through, for example, hey, what's the price of NVIDIA right now? Can you just tell me? I'm going to get it back on.
NVIDIA is currently 193.20.
Okay. I'll show you the chart.
When you were talking about the algos, and immediately what kind of came to mind is, the market's designed to fool the majority of the time. It's not so much like a. It also kind of had me thinking about like social media and how social media is kind of designed to siphon energy from people, and then like just generic, just generally speaking, whether it's like stock twits or probably more so like Twitter and Facebook and stuff, but it's like, you post something on there and you don't even like, if somebody comments on it, to like ruffle your feathers a little bit, like you don't even know if it's like a real fucking person. Like it's just a bot out there that's just like looking to ruffle you.
It
and
is.
get you,
I mean, it's crazy.
It just kind of what came to mind when you're talking about the algos, kind of pushing price from. Yeah, I hear you. So
it's completely nuts, right? I mean, and you follow it on short time frames, and then it's not just about price, but it's about the timing. Like on candle closes, for example. So you'll see price just fucking around for 3 hours and 59 minutes, and then on the 4-hour candle close, it's suddenly somewhere where it needs to be. So how do you explain that with volume and buyers and sellers? You can't explain that with buyers and sellers and volume. It's all programmed. And so here's my NVIDIA chart for today, and I asked you what the price was before I turned to the chart. Right. So there you go. 193.89 is the pivot for today. We stalled at 193.71, and we're currently just below it. Right. I'm going to give you what the trade is for NVIDIA into earnings. Right. So this is how NVIDIA is likely to move, both in terms of whether it's going to break out or whether it's going to fake out everybody. Right. So this is the trade for NVIDIA. Notice here, let me just zoom out a little bit. Right. So here what you see is two very similar cycles. So this is what we're talking like my drawing pen. And then we can take a look at other charts as well. So because I know you said, can we look at MAGs? I don't have MAGs as a group, but I do have all the charts. So we can look at Tesla, we can look at all of them. You can look at Apple, you can look at whatever you want, but I just don't have them as a set. But let me show you so this is the trade for NVIDIA. This is how I'm going to trade NVIDIA going into earnings. I know that NVIDIA will break out above 196, let's say 197. That's the pivot. 197 is the pivot for NVIDIA this week. Right? And I know that there is precedence of it rejecting that pivot in 2025 like that. Now, clearly, there's no guarantee it's going to do the same again. But given how the moving averages look, given how prices approached that boundary, the 200-day moving averages in both cases, it's identical. And it was likely to do that into earnings because they had done that in the same area of the chart before. So this is one of the examples of that I'll use to say is months, right? It's gone sideways for months, right? It could have broken down before earnings, but it was unlikely. Why? Well, now you've got Monday, Wednesday, Friday options expiries for all of these names as well. And so what the markets are going to do is just to screw everybody, certainly into the days of earnings. So the price action that you're seeing in the market today with QQQ at 608 is part of the whole exercise of screwing over as many traders, long and short, into NVIDIA earnings. I mean, 3 days ago, QQQ was at 594, and now it's suddenly at 608. NVIDIA was at 170, and now it's at 193. They're taking in turns to take out the longs and the shorts, and they've done that with Tesla for ages, and they're doing it with NVIDIA and with everything else, right? So anyway, here's the trade. Here's the trade for NVIDIA, right? Let me just undo some of this stuff. Just 1 second. Right, so here's the trade, right? So what I'm looking for a successful reaction is that it holds 197. Of the ways in which it could do that, and did you notice that 193 came into play so far this week a couple of times? Yesterday's highs, today's highs was in the 193s. So what's possible is that into earnings it goes from 193 to 197 and rejects. right? That'd be one thing. The other way in which it could play out, and this is one of the ways I'm thinking about, is that it takes out the shorts. It goes to 197, right? So it goes to 197, and then from there it must hold the back test at 193. Right. So I'm sorry, I can't. It's very hard to write with this drawing tool, but so the move I'm looking for is for it to go to 197, but to hold 193 on the back test. Right. So this would be optimal for the market. Right. So either it takes out 197 and it stays there, or it pulls back from 197 and it holds 193, and then it takes out 197. Fine. It's got to take out 197, because the alternative is that this failed attempt to break out could see this move down. That's the move down that would take QQQ from 608 down to 580 or 570 in 3 days. So when we talk about catalysts and stuff, the charts are set up to give you this binary outcome. So when we talk about, when we talked earlier about, well, there needs to be a catalyst or this needs to happen, well, there is a catalyst this week, which is NVIDIA. And then you've got things like Iran could happen and all these other things, which all the bears love to talk about. But just from a technical point of view, they're parking prices in the right spots to take out as many people as they can on the night of earnings. Right? Now, that's always the case, but I'm just giving you the numbers so that we can actually trade that. Right? So right now, I see there's not much, there's no real reason to be holding at this 193 area. You got the move up, you see 197 taken out after earnings, right? So the bearish outcome is that we reject the breakout and we've moved down like that, just like we did in early 2025, like that. That's the bearish outcome. And because it's happened before, I can't ignore the possibility that it happens again. It doesn't have to do it. It doesn't have to, absolutely doesn't. But I've spotted it. And remember, my objective here is just to spot risk. Spot risk, make sure that I'm aware of it so I'm not blindsided by it, right? And if instead we take out that 197, that's going to have that knock-on effect on the Qs. So QQQ will be above the 20-weekly moving average by then. Right, so QQQ will take out the 20-weekly moving average if NVIDIA takes out 197. And then we're back to my base case, which is the market grinds higher to 670s, right? 670 in the Qs by the end of March, April. And then we see the correction on time on the edge of that downtrend channel, which was always the base case. The question here is whether, because of what's happened with AI and Claude and all the rest of it, whether that is a catalyst that could affect other areas of the market, whether that weakness in tech follows through with this area over here. It may or may not happen, but I want to be prepared for it. And I want to be prepared for it in a way that I can quantify it. What are the numbers? What needs to happen? What doesn't need to happen? All right. And on that note, and we'll talk about other stuff in a second, when Ethereum rejected that day after I was on, which was really funny, by the way, right? It rejected at the level I showed you, 3,150 or whatever, 3,049 or something. I have the pivot on the chart. So, I mean, everything was perfect. I mean, obviously I wanted the breakout, but what happened was perfect. Everything was perfect. And this is why I never get upset by algos taking your legs out, because we've seen that possibility before it happens. We've seen it because it's nearly always at a level that it's always at a level that makes sense. It's never random, right? It's just a question of how well the charts are prepared. And I can take a look, if you want to, we can take a look through some of the other charts like Tesla. I think one of the guys was asking you, please ask him to look at Tesla. Do you want to do that? Or if you have questions on the video, we can take a look at that too. What do you guys think? I'll let you talk.
You can always look at that piece of shit Tesla.
I'll be happy if you look at it. But here's my assessment: up and down.
Go for it. Go on. Up and down.
Up and down.
Hey, Cookie. There were some comments in the chat before we go on and look at Tesla real quick. I just want you to clarify. You're not talking about the fall off of COVID. in 2020, right? You're talking about August through December during 2020. Is that accurate? Or are you talking about the fall? You're talking about the full fall off.
Well, let me show you. Let me show you what I mean. Right. So let me go to not here.
So then the question becomes, if you're expecting another 15% to the downside on the indices, shouldn't it be you're not bearish enough?
Because I think that will lead to the buying opportunity of the effing century.
Yeah. No, I understand that, but that's still to come, right? Like right now,
sure,
you're not bullish, you're not buying. Yeah.
I guess the confusion is, I came on last time and I said you're not bullish enough, but I also explained that we could see this round trip in XBI, for example. I also talked about these round trips during the same discussions, right? So I was saying that I think the markets are going to go up and down and then way up, and that's why we're not bullish enough. But we need to be prepared for a corrective move before the end of Q1 or into Q2. That was always the base case, right? So I think the future is very bright and that we're going to go much higher. But I just want to be prepared for the possibility that we get this deep correction that I think many people still think is not going to happen, right? Now, clearly it's happened in software and some other stocks. Financials are falling off a cliff as well, right? So the shoes are slowly falling off, and we could still see that. Let me explain here on the XBI chart, for example, right? That this is how the market has moved over the last 3 months, right? So if we go back to 2010, 11, right? So this is what the market has done. It's gone sideways, like the Qs have, right? So this is the move I'm looking for, right? This is the move I'm looking for. The market goes sideways for 4 months. Right, so this is what happened. This is like, so from October, November, December, January in the Qs, right? So the market's gone sideways for 4 months. Everybody thinks it's fine, and then shit hits the fan. Right now, that might be as a result of NVIDIA could be the excuse. Iran could be the excuse. It could be Taiwan being invaded. Could be the excuse. It could be lots of different things, right? But all I'm suggesting here is that don't assume that just because the markets haven't gone down yet that they won't. Because normally these sideways periods resolve lower. They do normally resolve to the downside before they go up. And I'm sure I've heard you guys say that, right? At some point. That
beach ball.
Sorry?
The beach ball. You pull it underwater and then it shoots up higher out of the water.
Right. But you could argue that, no, I think the beach ball is going to go underwater first. I think that's what we're going to get. And again, I could be wrong. I mean, let me just say this as well. Of course, I could be wrong, and we don't get this massive correction. But what, we go back to, has anything changed? Nothing has changed, right? And this is why I continue to think that given where we are on the QQQ monthly chart and where we are on XBI, that is still possible. Now, let me just show you how XBI corrected back in the day that I'm using as a reference point, as one of the reference points. It corrected from all-time highs. So in the month before the breakdown, it was at all-time highs. It was actually, at the top, well, let's say the top of that range. It didn't start falling out from the bottom. It was at the top of the range. So the fact that we are at the top of that range doesn't negate the possibility that it could happen all over again. So again, you've got QQQ at 608. You've got XBI at 130. None of this is random. Why is XBI at 129? Why is it at 135? Why is it at 126? Why is it at 130? It all goes back to the same idea that I mentioned before, which is that all markets are coordinated to the second, to the cent. And it's not just here, but it's around the world, everything. It's all coordinated, right? And so you get everything lining up at support and resistance together. Right? So here, we take at 132, and we will likely see that QQQ move to the 670s. We reject around here, we could still see that move down. Now, we were talking before, I think, on the last call as well, about how might that move down look. So I am looking for a flush, which takes place in 1 month, but then the market bases for 1 to 2 months. All right, so that's the type of move I'm looking for. So it could be a quick move down.
So similar
the lows are made with, sorry,
like similar to the tariff. Kind of similar
Liberation Day. Yeah.
Well, I think tariffs were actually even no, it was even less than that. Tariff was like everything was done within a month. But here, if you notice, right?
Oh,
here, if you notice, at least 2 months, because you've got that. So I mean, this is another thing that you can look out for, right? So it's another tip for. This is another tip. Like, so this is my insight into price action tip for the call today. Right? Here's what you want to look for. This is how you evaluate whether a move down is done or not, or whether a bounce is meaningful or not, right? So typically what happens is, as prices break down below a support, you'll see price retrace and leave a wick, but still close below the loss support. That loss support is there where I've marked this horizontal line. So you get this move down, right? You get that all the buyers step in, and then we close the month below the loss support. And then the next month, we retrace all the wick. We fill in that wick in the following month. And the reason why we do that is because we weren't able to close that initial candle above the loss support. That's the reason why, right? So as far as what might happen this time around, this is what basically I'm looking for. I'm looking for a quick move down. It may leave a wick, so you see something like some buying into the monthly close. We close below that, and then the following 1 or 2 months we base. And then we go higher. So this is going to last 3 months, which is similar to what I think I may have said last time when I was on as well. So again, this is the base case, right? It doesn't have to play out, but nothing has happened yet for me to take it off the table, right? And that's what I mean by, it's not about being stubborn to anything or wants to hold on to an idea that may not work, but it hasn't given me any information yet to say it's not going to happen.
What would be the magnitude?
If QQQ takes out the 20-weekly of the move down?
Well, looking at the Qs, right? Or you can even do the or the SPY, either one. What do you see as the magnitude then of that potential fall off? Is it 10%, 20%?
Okay, here we go. I'll show you now.
550.
I think we'll get to, well, either I've got two, right? So I've either got this 560 area or even 520. It's that ballpark there. I think it's going to be easier to see on the monthly chart. Let me just go back to the monthly. Just 1 second, right? 1 second.
So
monthly chart.
That's between 5 and let's call it 13%, which is not dramatic in the grand scheme of things. Yeah, I think what's important.
I think we'll go down to.
I think what it's important to notice, though, is there's been a lot of names underneath the hood that have already been whacked 30, 50, 70%, right? Or more in some names.
Right.
I don't think, anything can go to zero, but this would obviously take everything down, not just the 5 to 15% on the Qs.
The most I'd be looking for is all the way back to 465, but I don't think we'll get that. I don't think we'll get that lucky. I think we could see 530, 540. So just undercut the 20 monthly moving average. Right, so undercut the 20 MA at 540.
So that's a roughly 10.5% from here.
Right, or about 20% from all-time highs, which was 640, right?
Which is
so we're going to have
17,
a 20. So it's possible that we're going to do 27% or 26% in 2025 and follow it up with another 20% in 2026. We're going to have 2 back-to-back bear markets.
Yes, it's possible. I mean, that's what you said in 2025. That's what you said in 2025 and before April. You said there's no way we're going to get that because we've just had it in 2024, right? But look, it happened here. So this was 2019 and 2020, right? And you'll tend to see that. So you'll tend to see price coming all the way back to retest the same supports that were made a year later or 18 months later. You'll see that. You'll see over and over again. Prices come back and retest supports a year later, right? So again, I'm open to the possibility that we get that. I'm not going to cry if we don't get it, but I don't want to miss the opportunity if it happens, right? So again, it's just about identifying the risk. If we get above, if we break out above here, then fantastic. Now, I want to just show you one other thing. I want to show you a couple of things. So when you keep saying things like, the names have already fallen so much, they can't fall anymore.
No, I didn't say that.
things
I said
like
I guess they could go to zero.
Talking to me.
Yeah.
He's talking to me.
well, no, they're not going to go to zero, but they come up so much, right? That let's say they're 20% from all-time highs. Well, they could drop another 10 or 15% more. They absolutely could. I mean, some of these names have been going up since 2009, 2013, 2015. I mean, they've been going up forever, right? Now, again, I don't want to sound like a big fuzzy bear, right? But I'm just saying it's possible, given how corrections have happened on these edges, that we could get something similar like that. So I'm not looking for a 3-4% pullback here. I'm looking for something at least double digits from where we are, not from let's say from this level, 10% down from here. If we go to 670, then I'm looking for at least 10, 15% down from that. Right. So, and again, the chart hasn't given me anything to say that we've passed that roadblock yet, right? And it's the good thing is that it's very, very simple to see. That there's no confusion. We take out 634, it's done. We take out. So my guess to how high the market might get and still roll over, 622. Right. So if we start seeing QQQ above 622, then I would say then it's likely that we're not going to get it yet. Right, so 622 is a March pivot on the boundary of this blue space here. So right now, I would argue that the bounce that you're seeing is a mere back test of the breakdown into the blue space, which could even get a little bit higher this month and be at 613, which is, funnily enough, the 20 weekly moving average. So the 20 weekly moving average is key because, I mean, we're still below lost supports here. Like, for example, look at this support. Let me just zoom in a little bit so it's easy to see. This, for example, here is a lost support. That's the breakdown. There's the rising wedge. You can call it rising wedge, I'm not sure, but there's the breakdown there, right? So that's 613. To get back above this lost support, which is the center line of this channel, we've got to get to the 20 weekly moving average. And we could do that tomorrow. We could do it today. Again, I'm just saying we haven't done it yet. Right. So, and I think as you mentioned at the beginning of the call, people are asking whether, is this it? Is this the correction that he was referring to, or could it still happen? And I think that the takeaway should be that we've seen nothing in the charts yet that suggests that is done. That might change this week with NVIDIA, but for now, given the bounce that we've got, it's still on the table. It might not be on the table at the end of the week, but it's still on the table for now.
I mean, I think that the reality is that like a pullback to 520 would be perfectly healthy. It's the 50% retracement from the tariff low to recent pivot high. And in any trend, a 50% retracement is perfectly healthy. And then you get if you were to get an undercut, I mean, that would just kind of add to the rubber band. I think what some people are missing is like, the game that we're playing here is a lot of if-thens rather than like speaking in absolutes.
Absolutely.
But it's always like that.
That's all that we're discussing here. Not like
looking for certainties. But you say if this happens, then you do that. But I think it's got to be like that. Unless, of course, you're a fundamental trader and you say, well, you're noticing this deterioration in the market and in the economy, unemployment's going up, there's not enough job openings, GDP is being revised down, credit in the system, all these things, right? I mean, there's a lot of worry that could explain weakening technicals, right? But right now, I'm just taking the technicals at face value, and they just say, well, things could change, but for now, they're what they are. Even if the market, let's take a slightly different view. Let's say the market just stays in this channel. What if it doesn't break down? What if it doesn't break out? What if it just goes sideways for the next until October?
So Cookie, which is your base case? 520 range or higher?
Oh, I will start buying at and below 520.
Other than that, you'll be trading around positions. Or
I'll be trading. Yeah, exactly. I mean, so my point of view here is the cheaper the better. And it would be a shame if we don't get at least below the 50 weekly moving average.
And if it breaks out, then you're trading to the upside, right? Like
absolutely.
It's if then.
That's right. And again, I think this chart shows pretty clearly that nothing's changed. Absolutely nothing has changed. I mean, we're in the same trading band that we've been in for the last 5 months. The weekly moving averages are rolling over. They could, and we're in danger of losing the 9 monthly moving average next month, which is how they all begin, right? And so I don't know.
Yeah.
Look, let me say also that I love for prices to go higher. Why wouldn't I? But I also love to buy bargains, right? So if the market is going to offer bargains, then I'm going to be lining up. I'm going to be lining up for those. So this is me wearing my bullish hat, and you're not bullish enough. So, I mean, nothing has changed as far as I'm concerned. I had always, since October, planned for the possibility of a weak end of Q1. The only difference was on the last call, there was the possibility that we break out. So that was me adapting to the possibility that we don't get that. It was me adapting to the possibility that the market does continue higher until April and May. We get to 670 in the Qs. But what I'm doing here is I'm taking into account the fact that the market is showing me something different. The market is telling me that it doesn't want to go to 670 as easily as this period here. I mean, this period here, that to the left of this consolidation, right? So I mean, clearly the market has changed character here. Right. The idea was that we continue in the same direction like this all the way to 670 and April and May, but the market's showing me something different. And even now, as we've been talking, it's still sitting at 608. So none of this is random, right? So the market, they'll find an excuse, and it could be as simple as they invade Iran. And whilst that might not seem so dangerous because our troops are so good, and I say ours, I'm not even American, but best military in the world. They don't stand a chance. It'll last a weekend, but it could be used as an excuse to tank the market.
Yeah, like it doesn't really matter what the news is. It's just
So
what they want to tie it. Like,
yeah, exactly.
I have a question then for you, right? Like, so your expectation potentially is leaning towards that we move down because of everything you explained. So if we get that news overnight, for example, the Iran war or whatever the catalyst is, are you positioned beforehand, or do you take the positions after it gaps down and the markets tend to move down afterwards, right? You said you're mostly cash with day trades and like swing short-term trades and stuff like that. So, but in this scenario where you don't want to be caught in a situation where gap downs could be a possibility, how do you position yourself beforehand, or is it always afterhand?
Well, I'm 100% cash, except for the day trades.
I know, but that's what I mean, right? Like if you're going to stay cash, then how are the day trades happening? It's always the same day, or there's nothing overnight when you day trade? Like
no. Okay. No. So the condition here is, while QQQ can't take out the 20 weekly moving average, I'm not holding overnight positions.
Okay.
And it's that simple. So there's a very clear line in the sand that I will assume that risk once QQQ has taken out the 20 weekly moving average, and then I'll be more than happy to be all in, right? But whilst we're below that, then I don't want to take that risk that the markets are. So for me, the 9 MA is basically a key support in the trend. The 20 MA is this, what I call the second guardian of the trend. But when price is sitting below a 20 weekly moving average, it's waiting to break down. It's waiting to break down. Now, clearly, that doesn't always happen like that. Prices could break higher. Of course, they could retake the 20 MA. But why take that risk? That's what I say to myself. Right? So why assume that risk when there's no need to? You can. So buying QQQ 613 is 1%. Even if I end up chasing at 614, 615, 616, 2% higher from here. So what? It makes no difference. But I'd rather forsake that 2% than assume the risk, the downside risk. And that's why I'm all cash. Otherwise, I wouldn't do that, right? But let me just show you a couple of other charts. Let's take a look at IGV. Do you want to take a look at IGV?
Yeah, I want to do that and Tesla. I know we're way long, Cookie, so I appreciate your.
Hey, I can talk.
You're sticking around. But we have a couple people in the chat wanting Tesla, but I, of course, would love to see IGV.
Okay, well, shall we do Tesla first?
Yes, please.
Yes.
Yes. And as as GP said, it's basically just sideways. Right. So here's Tesla, right? Now, so this is the same template as NVIDIA. It's the same chart. They move through the chart differently, but it's the same chart. Right. So this is how Tesla looked. This is what Tesla's done, right? So I always have these reference points where it says you are here, right? So this is what I'm looking for Tesla to do. It's just like what NVIDIA did. It came down and it kissed the 200-day moving average, and then it bounced quite strong. NVIDIA is still up there. I'm sorry, I'm pointing to, I'm not sure you can see where I'm pointing to. Let me just get my pointer out. Excuse me. Let me get my pointer out. Right. So NVIDIA bounces at the 200 MA and it goes to the channel boundary, right? Tesla's in the lead. It's already done that, and it's fallen all the way back to the 200-day moving average. Right, so it's come back to this space here. So as far as Tesla's concerned, it's in no man's land here, but it's in no man's land below falling moving averages, below the 50 MA, below the 20, below the 9. The only thing it has going for it is that it's being supported by the 200-day moving average. But what's likely to happen is the 200-day come together. And that will cause that will create the convergence that we'll see ultimately prices out the break out or break down, right? So that's a completely, unbiased take on what we currently see. But if I just zoom in a little bit and show you what I think might happen, right? So let me just get rid of some of these marks. Right, let me get just 1 second. Right, so here, and so in terms of, so I'll give you the trade for Tesla as well, right? So the short-term trading for Tesla, this is what you do. And notice this, right? This goes back to the insight that we talked about on the call last time I was on, which is about candle highs and lows and the 9 MA on that time frame. So notice how Tesla came right up to yesterday's high. Yesterday's high was 407.70, and today's high was 407.68. Right, so 2 cents. Again, that's not random, right? So, and the reason why the algos do that is because if we were to take out yesterday's high, it opens up a path to the 9 MA, which is tradable. I mean, it's not much, but you could trade that. You could say, well, that's 412.5. I'll take that trade from here to there, right? So that's why it pulls back over here. And it's just sitting here now in no man's land, right? So it's an inside candle, but different to how it's looked over the last 10 days. Right, but so unless it's able to take out a previous day's high, the 9 MA will push it lower. Right, so the 9 MA will push Tesla down unless it's able to take it out. Right, so the 9 MA will do something like this. 50 MA, the 20 MA will do something like that. So this area here is where it's consolidating, and it will get pushed down like that, unless it takes out the moving averages, right? So that's like short term, and then clearly you're looking for it to eventually cross this area here. Now, the reason why I'm less, let's say, bullish on Tesla is because the 50 MA has rolled over below this resistance. That's never really what you want to see, right? So it just makes it less likely that things break out when the moving averages aren't pointing in the direction of the breakout. Right, so if the moving averages are pointing in the opposite direction, it's less likely that the breakouts will stick, even if you see a candle above like that. Right? Now, as far as what it might do longer term, I've got a chart I can share with you. Let me do that. 1 sec. This way. Right, so it's coming at 405. Let me show you the monthly chart for Tesla that I've got. Tesla monthly, this one here. Right, now this is a bit weird. All right, so again, it's one of those colorful ones, but it's doing something pretty interesting here. Look. All right, so this lines up with the idea that the markets could pull back in the next 2 months as well. This supports that thesis as well, right? So what you've got here is cycle 1, which are the EVs, and cycle 2, which is autonomy and bots. All right, price has moved in a very, very similar way this time round as it did last time round. All right, so you get this strong move up in 2013. It consolidates for 4 years, and then you get this archway, and then it breaks higher after that, and it's doing the same all over again. So you get this wedge over here, it pushes higher into this arch, and so if we were to see that 15% pullback in the Qs, I'd be looking to buy Tesla at 240, which is a hella haircut. Right now, is it guaranteed? Huh?
A hella haircut.
It's a hella haircut. I'd buy that. I'd absolutely buy that at 240. Now, is it guaranteed that it's going to do that? Well, not really. Obviously, I mean, it could break higher, right? So right now, just like with the Qs, it's sitting on the 9-monthly moving average. Just like the Qs is sitting at the 9-monthly moving average. Just like the Qs went sideways for 5 months, right? Now, I think the key thing here is this 418. This 418 is very important, and also this month's high when we look at the March candle, right? But 418 is going to be very important because what 418 does is it tells you that that's where it breaks down into a new channel. Let me highlight that, right? So right now we're at 405. It's not far away. It's not very far away, right? It's just 3% from there. But you want to see it hold this cement-colored channel like that. Because back in 2025, this is where it breaks down. And you can see it's been consolidating along this support for the last 4 months, and it's currently below it. Right? So this is where you see risk in Tesla. So you say, I'm going to ignore Tesla unless it takes out 420. I'm not interested. If it can take out 420, I'll be interested again. But whilst it's below 420, well, honestly, give me the 20 monthly moving average, even give me the 250s. I know that sounds like a nightmare. So, oh God, you're not suggesting a 50% haircut in Tesla. Well, if the market pulled out 15%, I mean, there's history of this. I mean, Tesla does this. It's not the first time. So, we talk about things like, if it's done it last year, can it do it again? This history of this. I mean, it's done it during this consolidation. It's done it many, many times. So obviously, it doesn't have to play out like that, but I'm open to the possibility that it does, unless we see this move above 418. Now, the reason why it's consolidated here, just to explain that to you, let me just get rid of this, is because of this. Is because of this resistance here. So this curved resistance here, that I'll call the egg, there, is what's pressuring Tesla to move lower. Right? So Tesla will only break out if it gets inside of this arched area over here. But the first step is it's got to hold 418. So there's all of these barriers, and even if you bought Tesla at 500, you'd be at the beginning of the move, because this is where it begins, right? At this 500 area here, right? So between 500 and 420, start your engines. But below 420, you don't even have a car. You don't even have a car to drive, right? Now, again, it could get above 420 today, tomorrow. It'll be great. It'll be great if it gets above 420 today. But whilst it's below, I'm not interested. Now, remember on the daily chart, it's below the daily moving averages. So to get to 420, it needs to go through the 9, the 20, and eventually the 50. This is what's stopping it from going to 420 again. Right? So even though you look at the monthly chart and you say, oh, it's not that much, it's only 3%, but then you look at the daily chart and it's got these resistances in the way. It looks like a tortoise now, doesn't it? But that's why it might struggle to get to 420 again. Right? So that's my take on Tesla. I mean, again, long-term, bullish as hell, like that. Right, but if the market, and this, with or without the market, it could do that, right? But hopefully we get. I say hopefully. I would love to get that dip, for it to go high from there, and to repeat the same cycle as it did back in 2016, 15, 14, because I think it's still playing out. Still, this part of this so that I'm prepared for the opportunity. Well, I'm prepared for the opportunity. That's basically what I'm trying to do, right? In case we get that. And if it takes out 420 before then I'll be more than happy to hop on.
All right, let's take a peek at the IGV, Cook.
We can, and if any of the guys who are watching or listening have additional questions, on Tesla than do ask, right? I know one of the things I don't do is just talk. I just talk, and I don't read any of the comments on YouTube and stuff.
That's what we're for.
Thank you, but do call out if there's anything that they want to talk about. And I know time is short, but let me just show you IGV, right? And so what IGV has done is done it before. Right? So there's precedence of this. So this is IGV, right? Just let me just load up the chart again because it's not done it properly. Just wait 1 second. IGV. It's done it again. So because it's done this before, we can discuss where it may go from here, what that means for Microsoft, what that means for Palantir, what that means for even Bitcoin, because Bitcoin is moving very, very similar to this. So is the move done? So this is the chart. This is the chart for IGV going all the way back to 2013. Right. So this is the excess. This is the failed. This is the failed breakout, just as you saw back in 2000. And just 1 sec. And I'll tell you where I think it's going to go in a second. Right. So you get this failed breakout in 2021, 22. You get the failed breakout over here as well. Right. That time round, we came all the way down to here. That was the bear market of 2022. This time round, we're stopped there so far. Right. So we could come all the way down to the low 60s. Right. We could come. I mean, it's not that much from where. It's obviously fallen a ton, right? But it could come down there. In other words, and this is actually very similar to the Bitcoin chart. Remember when I was on the call last time and I said, if Bitcoin doesn't hold 84,000, if Bitcoin doesn't hold 84,000, it will go to the 50 monthly moving average. And that's where it did. Bitcoin, the 50 monthly moving average in Bitcoin is 58,000. It went to 60. Right? So it just held above the 50 monthly moving average. Now, so this is the equivalent of where we are right now. Right? This is what came next. This lasted 5 months. This is what Bitcoin could do, and this is what software could do. Right? And again, there's precedence of this because it's exactly the same technical look as back in 2020, 2023. And so here you could say, well, what would it take for IGV to make me bullish? What levels do I need to see it take out for me to get constructive on this? And I would say, I want to see it get back above 82. 82 was a key breakdown, what I call this black hole area here, this grayish area here. Get back above 82, and then I'll give it the benefit of the doubt. But while it's below 82, and also if you think about it, right? So today is what, the 14th of February? Well, it's 15th here already, right? But the 14th of February, you've got this horrendously long red candle. So all we're doing is we're putting a wick on that candle. There's no reversal there. We're putting a wick on the candle, that's it. Right? Now, whether that ends up being a reversal or not, time will tell. But at the very least, take out the 50 monthly moving average. I mean, what we could see, and this is what I think we need to be prepared for, right, is we could see price action like this for 3 or 4 months. Right? Unless next month we're above 82, and then we just go higher from there. Possible, but I think it's unlikely. It's possible. I mean, again, I'm not ruling it out. I just think it's less likely, right, of the different outcomes, right? As far as the move itself is concerned, right, what it's done is you can see this is the big breakdown over here. Right, so there's the resistance there, breakout, back test, goes up again, and then it goes down. So this is 84. Right, so I would say that I guess is good. Well, again, never say never, reversal, that IGV takes out 85. If it takes out 85, then I think that's where you go all in. That's you say, right, I'll go all in, I'll use 82 as a stop, but I want to see it hold this 84 area because that's the breakdown. And it basically says, you've got a failed breakdown there. Right? But whilst it's below the 85, I think we could come all the way down to the low 70s. Maybe even 65 or something, down to this area here. And it ends up being a double bottom here. Let me just show you. Ends up being a double bottom along there.
Yeah, I was kind of thinking something very similar where it takes out the 70, that 76. We come back to like mid 60s, even like low 70s. and then
Right.
kind of put in like an inverse head and shoulders where we reclaim the level that we're holding right here at 76. We reclaim
Right.
it and then kind of find a floor there. I think that'd be a phenomenal trade and a phenomenal setup too. Yeah.
And that's even though it's come down so much.
Yeah.
So I think the fallacy here is that just because they've come down so much that they can't go down anymore, but history has shown you that they can. And you can say, well, this is different. This time is different. Well, it's not. It's playing out in exactly the same way for different reasons. I mean, this time around, it was the bear market. This time around, it could be whatever else you want to say, whatever their excuses. It doesn't matter, right? But it's playing out in exactly the same way. Now, again, if it takes out 85, you negate that. But whilst it's below 85, I'd be looking for the mid-60s, just like you, Nick.
Would you? So, looking at the IGV, the way I would kind of be like, at least, or the way I'm thinking of it is like it's on a larger time frame, you're late to the party if you're looking to short this thing anymore, right? Like your downside risk, your downside is probably pretty limited if we're shooting for like mid 60s to low 70s. You're only talking like 5-10 points from here, at least in the IGV. Whereas the violence and like the destruction underneath the IGV, like the trade here, I think, is just kind of step aside, let it kind of bottom out, reclaim that 75, because then you have you have the wall of worry to climb, right? From like the 70s, let's just say back up to highs. While it climbs, it's gonna provide an incredible amount of opportunity again within the IGV and that whole sector as a whole. I would imagine. At least it's just how I'm kind of like thinking about it. Like I just don't I don't buy the like. I think we're in a like AI like little like fucking hissy fit right now scare where I don't know. I think I don't know. That's just kind of what I think was happening with IGV. Like I think it's only gonna bode well. Like once AI really starts to kind of like, or at least let's say the market has a better way of kind of pricing it into a lot of this like sector and industry as a whole. That's just kind of why I think it's like a repricing basically, or a I don't know.
I think just on.
Are we seeing? Do you look at volume at all, Cookie? That's a question for you.
I don't.
You don't. So like today was the opening candle was the highest volume we've seen throughout the sell-off, right? Just something to keep in mind. Now we've seen 2 of those high volume candles in the last 2 weeks or 3 weeks, and the first one was at around that 85 level that you were talking about too. So to me, it's these buyers are stepping in early, and if they can start reclaiming this, then the snapback in a lot of IGV will be pretty monumental as well.
I agree. I think that makes a lot of sense. I mean, also just on the glass half full side, 78 is an important level because if you look across the chart, there has been support along this trend line in the past. Multiple times, like resistance and support along this 78 area as well, which explains why we're just sitting here as QQQ 9608. So again, everything is sitting at important levels into NVIDIA earnings. Can we talk about Bitcoin?
Yeah, 1 second. So the top holding in IGV is Microsoft, FYI. And I think Microsoft has been unfairly punished based off the IGV, right? Because IGV is in a downtrend. So that also goes along the lines of what I was saying earlier about Microsoft. I think Jensen, this is completely not chart related, but I think Jensen, when he gets on the call tomorrow, is going to talk about software meaningfully and give these guys an opportunity to rally, right? I think so. He has been pro the markets, even though the markets don't give a shit what he has to say, for years now. He's investing in these companies overall. So he's throwing his net out in many different places. And I would say he's one of the greatest developers, founders, allocators of capital in our generation, if not all generations.
Yeah, I agree with that. Absolutely. No, 100% agree with that. let's see how it pans out tomorrow. Huh?
Yeah.
Hopefully, I hope it does well. I hope it does well. I hope it knocks it out of the park and that the market rewards him for it. I really do. I mean, I really don't mind buying at 613, but I mean, I'll be a bit sad, but I'm talking about the Qs. But let me just show you a Bitcoin because I think it's part of the same story, right? And that's why I wanted to just do a segue to Bitcoin from IGV because I think it's very, very similar. Also, actually, do you want to take a quick look at Microsoft?
Yeah, go ahead.
Right, let me just show
as long as you have time, we have time.
Okay, because I know your calls only last an hour, but I spent the first 20 minutes just defending bullshit from last year. But hold on, let me see if I can load this up. All right, so this is Microsoft, right? And we know how it's come down a lot, and I would argue it could come down more. Right. So this is what Microsoft has done since 2009. Since 2009, right? And also why it's finding support where it is. So again, we go back to what I mentioned before about this support. So this is the support in 2025 in April, as we come down to the same support. So we're retesting the same support as we did with the April tariffs, based on this chart, based on how I've shown this chart, right? Now, if Microsoft was to go lower, this is where I think it's going to go. I think it'll go to 310. So that would be my target for Microsoft if the market does weaken for whatever reason. Again, whatever the catalyst happens to be, I think we could see 310. And that will be a back test of the highs in 2021, right? And the breakout that we had over here. So this sort of area here, just an FYI. And if you look at the chart, it could come down to 310. It wouldn't look bad. It would still look like a decent chart. Right, so I'll just leave that with you. And I want to show you with you Bitcoin and why I think Bitcoin holds half the answers here because Bitcoin started weakening before everything else, right? But in the end, it's actually well, certainly let's look at Bitcoin daily, right? So this is what it's done since the October highs of last year of 125,000, right? So it's coming down this channel, and these are the counter trend channels that you're seeing, right, along the way. And why I think that if this ends up being one more period of consolidation, and then we go down to 40,000. Right? Now, if I think Bitcoin down to 40,000, I think also the rest of the markets are going to go down a little bit lower too, right? But even if it doesn't happen today or tomorrow, but certainly between now and the summer, I could see that, right? It would be unusual for Bitcoin to continue going all alone down to 40,000, right? And the other markets don't. Now, of course, you could argue that this is the low for Bitcoin, 60,000, right? So this area here is the 50 monthly moving average. IGV came down to the 50 monthly moving average. Microsoft came down to the 50 monthly moving average. So all of these will hold together or they will fold together, right? And so as far as Bitcoin is concerned, some of the guys I'm trading with, they're buying the 61,000 support and they want to ride it for as long as it holds. And then if we lose that, then I think that we could see that next leg down to around about 40,000. But that's basically the channel that it's in. As far as does Bitcoin look bullish here? Well, you could argue that it looked the same bullish in December, and then it broke down. All right. So again, we go back to what I mentioned, earlier in the call, which is, they're just consolidating and they're just going sideways. They've been absolutely hammered, right? But there's nothing yet that's showing me that this is the beginning of a lasting reversal and that they're just consolidating these bearish moves that we've seen so far. Hey, just one comment on volume, right? Do you remember what was the biggest capitulation day in Bitcoin's history? Like liquidation day, I should say. What was the biggest liquidation day in Bitcoin's history? Because that relates to volume, right? What do any of you remember? Do any of you know?
Well,
Was it FTX day?
22?
22, November. Sorry? 22.
Nope. No, so FTX, no. Okay, it was October 2025.
Oh, yeah.
Was that right?
Wait,
it was there. So in October,
it wasn't March 2020.
No, it was October 2025. So this was when Bitcoin liquidated the most number of people. This day here. Right now, so that was by definition the biggest volume in terms of liquidations, and this is what it did since. So what was shocking for me was that because I had marked on my chart biggest liquidation days in Bitcoin's history, and normally they would be associated with reversals and bottoms in the market, as you would expect. Like big liquidation days, big capitulation days, big volume days tend to be reversals. But this happened after all of this happened after that day. Right? So all this does is really just tells me to keep an open mind to, whilst volume is important and you see capitulation liquidations, it doesn't necessarily guarantee that you're going to see a reversal. I mean, it does. You do often see that, and this is just one example. But in the case of IGV, and I'm going to say IGV and Bitcoin, I'm going to group them together. It wasn't the case, right? So this was the beginning of the misery for them. It was the beginning of that. And you turn back and you think, well, oh, this is when all the big money got out. So in October, everything started going tits up. Right? IGV names, a lot of the large tech names started like really suffering from around about that day. That's when big money started leaving. Right? So this is not something I started like a month ago, but it's already started, 4 or 5 months ago, but it was associated with large volumes as well. All right, guys, I think I bored you enough.
No, you haven't bored us at all, Cookie. It's always something to think about. I think we're at the floor on Bitcoin personally, but that's my base case, and we have to be prepared for ifs and thens, right? If this happens, then that happens. So I'm open to Bitcoin going lower, but I kind of think I see that bear flag that you have drawn there, so I'm not loving that, but it's a possibility for sure.
And
so
this
one thing for a lot of the crypto names, I don't really care about crypto in general. But what you're starting to see, at least in the last couple of weeks, is Bitcoin's weakness met with strength in the ancillary names of Bitcoin and Ethereum. For example, Coin. For example, MicroStrategy. For example, BMNR. You're starting to see relative strength show up in those names versus Bitcoin and Ethereum, which continue to feel like the bottom is going to fall out. So just something to keep on your radars. It's possible that it does fall out and everything comes down with it, but the relative strength in those names, like Circle, like if you go through it, even like Hut, Wolf is having a day today. Ben, Wolf.
I love that. I know.
Let's fucking go.
I know. It
got stopped out.
We'll
anyway,
talk about it later.
What I'm saying is that you're starting to see relative strength show up in these names, even though crypto hasn't shown its colors yet. And yes, that relative strength can ultimately become weakness, because if these buyers find that this is going to go lower, you add power to the downside, right? So the dip buyers add power to the downside. But just something to keep note of in terms of crypto in general is there's a positive divergence going on.
Okay, cool stuff. I mean, just as far as like trading crypto is concerned, naturally you want to buy at the bottom edge of a channel, and you want to sell at the top. So the fact that Bitcoin's finding some support over here makes sense, doesn't it? I mean, if it's going to consolidate, this is where you'd expect it to consolidate. And with any luck, it can walk across this channel and not just fall down again. But so if you're going to short-term trade crypto, then this is where you would do that. Right? So even if you weren't convinced whether it was going to reverse or not, this would be where you start thinking, well, okay, as a short-term trade, I'm going to buy this area here, right? And hopefully, and see how far across the channel you can get.
Do you generally look at, when it comes to whether it be the candles or the bars, are you generally looking at one time frame, or are you kind of zooming in, zooming out, kind of back and forth?
Oh,
so like, are you looking at like a monthly, weekly, daily, then back to like a daily, weekly, monthly?
All of them, yeah. I mean, I go from the monthly all the way down to the 1 hour.
Oh, okay.
I mean, I go down to the 1 hour because I'm day trading as well. So
sure.
But generally, it's monthly down to the daily.
Yeah,
I'll go through all of them. And so, for example, if I'm looking for a monthly pivot to be taken out, I'll check to see whether there's any lower time frame resistances that stop it happening. Like, for example, we talked about on Tesla just a couple of minutes ago, that 420 area is important on the monthly, but the daily MAs might get in the way. The daily pivots might get in the way of that. So
sure.
So definitely skip across different time frames.
Yeah, I perpetually like zoom in, zoom out. And they kind of all end up influencing each other to a degree. Like, for instance, like the Qs, like somebody might argue that we're putting in kind of a bear flag. Price broke, price failed at the 50-day, and now we're kind of, basing below the 20. But then if you zoom out to like the weekly, we basically put in a 3-week tight right on a rising trend line, right on the 30 and the 40. Granted, we are below the declining 10 and 20 day. Take that with a grain of salt, because we've been in a range now for 25 weeks. So then, like, I'll go back out to the monthly, and it's like, yeah, we're tight. And again, like shit, a 50% from here would be perfectly healthy. I generally look at fibs as a way to kind of determine like the strength behind the trend. So obviously, like, the higher up in the range, or the higher up in the trend that we hold, obviously the stronger that price is. But I feel like I look at charts in a similar way that you do, but it rhymes. It's not quite the same. I did tear apart the Qs, after that last conversation, or the last time you were on. I tore apart the Qs and really started putzing again with that kind of golden ratio, and which kind of led me to thinking, like, again, a 50% pull in here, like, wouldn't be like, it wouldn't surprise me like one bit. A pull into 540, 550. It's just, I think back to kind of the earlier conversation. It's like, what are the odds that happens? Well, I don't know. Like, I don't know, like 10% chance that happens, or 50%. I don't fucking know. I'm just saying that I don't want to discount the possibility of that happening. If you were just like in this camp of like, this is a guarantee, well, then there's no reason to either have any cash to deploy, or you should just be full port fucking long all the fucking time.
Exactly.
So it's just
you don't discount any possibility.
Yeah, exactly.
Unless, of course, it's just ludicrous. Yeah, I mean, if technically the possibility is there, then I think you can't ignore it. I think it's good to be able to spot them, and then you see whether they work or not.
I mean, if anything, even just to kind of temper your bias, to say, like, no matter which way the market is going to move in the short term, there's an incredible amount and a lot of fucking opportunity coming. Just like, even if the Qs, let's just say they do bottom here, like we're bottoming out as we speak, kind of in this kind of whatever, double bottom on the daily. Like, the amount of obliteration underneath, and a lot of kind of like Momo, kind of the popular FinTwit names, like the opportunity that's coming for those charts and patterns to rebuild and reset. Like, I agree with it. Like, we're not bullish enough, but also timing and time frame is important. So I don't know. I just wanted to kind of touch on that.
So I don't understand that. I'll say it again.
Yeah.
I don't understand that statement. You're not bullish enough, but we're going to get a 20% correction, and half the shit's going to get 50% discounts.
Well, because
those are contradictory on every level possible, in my opinion, because we don't have infinite cash pools. We don't, right? None of us have infinite cash pools. We are not sitting on billions and trillions of dollars cash. So you can't be we're not bullish enough and also be, hey, we may get a 15% correction and Tesla's going to 240, right? Like, it's. I'm sorry,
but you shouldn't be riding Tesla down.
Well, no, I think it comes down to time frames, because if you think Tesla's going to get to 1,000 in 2 years, let's say, right, for the sake of the discussion, let's say you think Tesla's going to get to 1,000 in 2 years, but in the next 3 months it could dip 15%. That shouldn't stop you from saying you're not bullish enough.
Yeah, but you're talking about
but it's because if you see the $1,000 target and they say, well, because you're bullish enough, you want to buy the dip if you get it. Right? I mean, that's the psychology behind it, right?
I don't think it correlates.
The opportunity.
We can agree to disagree, because I don't think it correlates. If you think something can take a 50% haircut, why the fuck are you buying it now? Like, it makes
you
no
shouldn't
sense.
be.
Well, you shouldn't be buying it.
That's the point.
You shouldn't be buying it. You should be holding cash.
Then you aren't bearish enough, right? It's not.
Well, you're not bearish enough in the next 1 to 2 months, right?
Exactly.
But
It's all about
you're bullish for the next 5 years. So there is a difference. I think it. Looking at my playbook, right? Like, do I give a shit what the price of NVIDIA is today? I've said this before. No, I do not. Do I give a shit what the price of AMD is today? No, I do not. I give a shit what the price is in 13, 15 years from now. And if it's higher in 13 or 15 years from now, then it was a better idea for me to buy at some point. Yeah, I can try to time the bottom and get as close to a lower cost basis as I can. But if you're trying to look at a long runway of time, then it's going to be higher over that time horizon. So I completely understand what you're saying, GP, and I completely understand what Cookie's saying. I think the better way to explain it is, sure, we have near-term volatility that can shake anyone or take prices higher or lower. Do I think ultimately in a longer-term time frame that prices are going to be much higher? And the answer is absolutely, hell yes, you're not bullish enough.
Right. I think also
bullshit. I will call bullshit all day. I'm sorry. Like it's just you cannot argue a 50% haircut and say you're not bullish enough because you're not buying the dip. Nope, we're gonna just agree to disagree.
We're talking Q's a 50% retracement from the tantrum low to the recent pivot high, which is like 540.
Just talked about Tesla going to 240. Like what?
Oh well, I'm not talking. Okay, sure.
And Microsoft going to 200. That we started the call with Microsoft can go much lower if there's no catalyst, they'll find a catalyst. We're talking like that. You're talking contradictory because you're not bullish enough. Will apply when Microsoft gets there. It doesn't apply now because people are going to be buying your recommendation and saying, okay, I should hold. Because
this is really funny. This is really funny because you're holding in until the last 5 minutes of the call. But I'll just say this, right? Is that it comes down to timelines, right, and horizons. Where imagine if you had an idea that the market was going to do something like what happened in April 2025, right? And if you were able to foresee that possibility, which some of us did. Right? It doesn't stop you from being bullish. You want to buy that dip if you get it, right? So I'm still as bullish as ever. Just if Tesla goes to 1,000 or Nvidia goes to 600 or whatever the numbers happen to be, right? But just because there's short-term volatility doesn't stop me from being bullish. And I think part of the problem also is that we get accused of being perma-bulls because we're always saying everything is bullish when we ignore some of the risks that are along the way. So I think that there's also a compromise and a balance between saying, yes, I'm as bullish as fuck, but at the same time, not ignoring some of the risks that are possible along the way, right? And I think just sweeping them under and saying, yes, I'm bullish as fuck, but without highlighting what some of those pitfalls might be, is also, I think, doing a disservice to people as well, right? I mean, in January of 2025, I came on and I said the market is going to dip quite strong, and it could be like COVID. In January 2025, and we had that in April. Now, who in the right mind comes on and says we're going to get a 25% pullback in the market? Now, I mean, it's hard to foresee that, right? But it was an opportunity, and we bought that. We all did. I think everybody bought that, and the reason why we bought that is because we thought the world wasn't going to end. Like the tariffs weren't going to destroy the universe. Just like now, we don't think Claude is going to destroy software, and that Bitcoin will continue to go up. Is because we're bullish, and as you said before, I mean, we all have a bias. We do have a bullish bias. We want to buy the dip because we think we're going to go from the bottom left to the top right of the chart. But I think it's a bonus if we're able to say, well, these are where the potential pitfalls are, right? Why wouldn't you want to say that?
I view it as a bonus to be like, hey, I bought the bottom, because I typically don't wait to call a bottom, right? Like I leg in, and sure, like let's use ServiceNow as example. I think ServiceNow is not going to be displaced by AI. I could be proven wrong and I could lose a lot of money on it, but I've got enough money to throw one more leg at it. And that's got to be my sort of line in the sand or my pole, my piker's position, my last piece of I'm holding on for dear life. So I think that being able to identify drawdowns are important while still saying that I'm very bullish. And I did the exact same thing last year, right? Like I was selling for 3 months and you guys were telling me I was fucking stupid.
I was with you, Ben.
Not so derogatory, but you guys were telling me you're going to miss this. You're going to like. I heard that every week from the two of you.
No, you were. Weren't you selling down to reposition though?
Yeah, I wanted
cash. Yeah,
I got down to 60% cash nearly to redeploy into names that I thought were going to be better off for me. And that was the thesis. It was, I want to see what happens in Q1 of this new administration, and nearly bang on to the end of the first quarter like it happened. So I don't want to be, pulling up all the things that we've ever talked about and had great calls on, but I was still bullish while short term I was very bearish. And the market kept going up. The market kept going up. I kept selling, and you guys were shaking your head at me every week of like, I can't believe this is good. Well, I can't believe you're doing this. Why would you do this?
I mean, technically it looked good. Like technically leading into January, the Qs were in a range. And then obviously, 2-3 days price diced the 20, the 50, and then all of a sudden took the floor out, and it was like, fuck, yeah. Right.
Or you could have made money when you started selling in end of October until January when it started to go down. It doesn't matter what I'm saying. Ben, you're not 100% cash, right?
No.
You're invested. And
yes.
Do you never sell out of NVIDIA, or do you always just buy the dip?
Well, NVIDIA is probably a bad comparison because NVIDIA is a recently established position for me.
Okay.
But AMD, right? You can say AMD. Do I never sell out of AMD? No, I've never sold out of AMD. I'm holding shares from the 50s. So yeah, I'm never going in my long-term account 100% cash. My short-term account, sure, I've got 100% cash in that right now.
Like I can't. I'm like 80% cash, right? So I can't argue that I'm not bullish enough when I'm sitting on 80% cash.
Sure.
Why?
I can't make that argument, right? This is not like you just can't.
But
like you can, but it's got a false bottom to me, because you're like, oh, I'm 80% cash, but I'm really bullish. So if this market goes, I'll go with it. You're like, yeah, but you're going to buy it higher, right? So
I understand GP.
That's exactly what I said.
It makes a lot of sense. I mean, I don't disagree with anything that he said. And we're talking about the market weakness over the last couple of weeks. Like a month ago or 2 months ago, why wouldn't you have been bullish as fuck? Right? 2 months ago, you didn't have any of the software breakdown. You didn't have Bitcoin at 50,000, 60,000. Right? So it was great. Everything was bullish as fuck. The only thing we're saying now is to temper that with what might happen next. So I agree with what GP is saying. There's no like contradiction there, right? So you're right. Don't be bullish as fuck with what might happen next. Be cautious. Be a little bit more reserved with what might happen next. But it doesn't stop you from being long-term bullish as fuck. I think that's what Ben is saying.
So like, we're talking 5 years down the line. I'm with you, right? But
I'm talking 3 months. I'm talking 3 or 4 months. I'm talking 3-4 months. I'm not talking 5 years. I'm not, just like in January of 2025, it was the same thing.
You're not bullish enough, just not this quarter.
Yeah. and that's why.
And then 3 months from now, we'll get another 25% correction. Like, oh, you're not bullish enough. Like,
no, but this is why I'm saying that it doesn't make sense to just go out there and say, everything is fine when it might not be. Right? That's it. But I think we're all sort of saying the same thing around.
We are
in different ways, but I'm not sure.
Dude, so like I've been a Tesla bull for a really, really long time, over a decade. All I'm saying is it does routinely take 50-60% haircuts, and that's normally Tesla's MO. So, but you shouldn't be buying it here until, as you said, once it takes out 500, the expansion out of 500 is monumental, right? You're not going to get the 20x that you got in 2020 because it's a more mature company, valuations and stuff, but it should be over 100% move, if not bigger, right?
Right. No, absolutely. And I think the difference here is, do you want to just have your bags waiting, sitting in Tesla for the next 3, 4, 5, 6 months until it clears 500, or do you buy when it clears those hurdles, right? And I think it comes down to capital deployment. There's going to be opportunities out there all the time. Do you want money sitting in Tesla going nowhere, or do you want to be buying industrials and energy and all of these other sectors which are doing well?
So I think that's the trap. I think that's the trap, Cookie.
Mm-hmm.
And I said this a week and a half or 2 weeks ago. I think everyone who is rushing into these safety and defensive areas because tech's getting slaughtered, they are falling in the trap. Multiples have gone crazy on these names.
You're buying Walmart at 54 times earnings when you can buy NVIDIA at 21, Microsoft at 20, Meta at 21, somewhere around there, all in the low 20s that have insane cash pile. It just doesn't make any sense, but it is what it is.
So with the Citrini research yesterday, right, that basically flattened everything from IBM to Visa to MasterCard. I mean, that's not going to just impact the tech stocks. That's going to impact Walmart. That's going to impact your XLU and your XLIs, right? Like that means half of the country, half the world, basically, nearly half the world is without a job. There is no money for consumers to spend on shit. I mean, so why wasn't everything getting slaughtered yesterday is the real question. Because they want to buy as cheap as they fucking can.
Hey, guys, can you see my screen?
I can put it back up.
Put it back up. Put it back up. I want to share something. Oh. This is a tweet that's been doing the rounds. Have you seen it? This is probably. Can you see it now? Let me know.
Yeah, we can see it.
Right. Okay. So this is the tweet from David Marlin talking about the tech and consumer staples PEs. Right. So you just mentioned that, and I have it open in case it came up. Now, as you can see here, so the point is that every time that you see this major move down in PE for tech coincides with bottoms, like, for example, 2025 April tariffs, bear market 2022, COVID crash, right? You see the multiples for consumer staples going up, right? Now, the point that's not mentioned in this tweet, but I don't know if you can see it. I don't know if you can see it, but let me just mention it anyway, is that each time that the PEs have bottomed for tech, it came down with staples. Right, so this is unlikely to be the bottom in the PE for tech, because the final leg, when the bottoms are actually made, is when they both come down together. Take a look at the chart. Go from left to right.
It's the concept of the hiding spots get taken out, right? That's your final leg.
Right, and then in the end, there's nowhere to hide, and everything crashes.
Yep.
Right. So what this shows you is that, well, the PEs for staples have gone up through the roof, and they're historically very high right now. If you go across the last 5 or 6 years, they haven't been this high for ages, right? So they will correct, but chances are that they will correct as tech continues to correct, and they'll bottom together, because that's what happened in 2022, and that's what happened in 2019. So this goes back to the argument, well, maybe there's another leg down in tech. Maybe there's another leg down in everything. Right. So and what Ben just said about it's a trap. Everybody's running for staples. Everybody's running for industrials. Well, he's right. It is a trap because they'll all move down together with tech, and that's when the bottom will be.
Yeah, and then the staples won't bounce.
Then the staples won't bounce. Exactly. Yeah. Exactly.
Yeah. This is
generation of bag holders.
I mean, again, we're just
but we aren't bullish enough.
No, I'm not bullish at all.
Tesla,
I'm bullish.
Right here, short term. I mean, this is what I said at the beginning of the class. I said there is a weird thing. 3 months ago, 1 month ago, we were not bullish enough. But I think now we do need to be a little bit cautious. Now, maybe it doesn't materialize and the market goes higher and everything is great, fine. But I want to be cautious, and I don't want to be as bullish as I was maybe a month or two ago, right? Because I think there's evidence to support that maybe there's still another leg down in the markets. Doesn't happen, it doesn't happen. We'll just buy wherever we have to buy. But I think for now, I'm comfortable with that. I mean, as long as each of us are comfortable with whatever they're doing, that's
just for the people who have stuck with us 2 hours and 6 minutes now, I really appreciate it. I did add to my AMD position and my Amazon position yesterday, and what a time to be alive on AMD. I love it when I'm all of a sudden up 15% overnight.
Yeah, because it went up this morning. I saw that news.
Yeah.
Congrats.
They're just distributing to you, Ben. You don't know it yet.
Yeah, I think so too.
I'm here for it. I'm a man of the people.
I think so too. Like they did with Oklo.
Oklo doesn't get any revenue. Oklo is
Meta and Oklo. No, that's true. I know they're completely different companies. I know. Yeah. Hey, but just as a final note, QQQ is at 607.7, and NVIDIA is at, because we discussed these, is at 192.69. Right. So again, the levels that we discussed at the beginning of the call continue to hold despite the strong day. I don't think ES will get above 6930 this week. If we're going to see the market begin to weaken, I don't think we'll see ES get above ES. So that's SPY futures, right? ES won't get above 6930, 6930, 6935, something like that. But we will see. I guess we'll see what happens tomorrow, right?
Hey, GP, you brought up Wolf earlier, and had I not bought more AMD, I would have bought Wolf. So I'm up 15% one way or the other, right? Like I stayed out of Wolf because I was like, I just got to hold on to some more cash just in case. And then Wolf's up, and I'm like, of course. So no good deed goes unpunished.
Dude, I got stopped out of Wolf 2 days ago because of the weakness, and then they do this shit, and it's like it's the same concept, right? Keep risk tight in a situation where we're at the bottom of the range and it can fall out.
I was debating it this morning. I was like, I still have a little bit of cash. Should I pull the trigger? And then boom, I'm like, well, there goes that, baby.
Yeah. It's how it goes. It's part of this world, right? You know.
Anyway, let's wrap it up. Cookie, yeah. Thank you so much for the 2 hours.
Hey, no worries, man.
I did not anticipate us doing this today, but I appreciate you. God bless you.
It was a great spicy call. It was I don't think I've heard you guys like that, but I was expecting that, to be honest.
Well, I came on. That's not the guy. That's me. It's a forever. I will talk my shit, and I will argue points as long as I can, because this, like, we just can't. We have to talk about it all, right? Can't just sit here.
Well, as you saw, I'll do the same, right? And that's why it lasted 2 hours. So
we're not bullish enough. That's my last word. GP, you've got a dad joke for us.
No, that'll be tomorrow's. I don't know. I think you should put some cash to work, keep tight stops, and if it resolves to the upside, you're positioned for it, but keep enough cash that if we do go down lower, that you have an opportunity to buy more. If you think another 20% correction is coming, you got to do what you got to do. But there are insane pockets of strength across the markets.
Nicholas?
I'll just say I this probably isn't advice that I think. I don't know if this is good advice or bad advice. When it comes to less is more, I think we're also talking about size too. Like, I would rather, what has helped me avoid getting chopped to pieces, because that's something that I have struggled with, is when things aren't working, but I want to try and take advantage of what I think is going to be an opportunity. I will definitely take smaller size with a wider stop, as opposed to larger size or same size with a tighter stop. So, like, for instance, if I'm like buying a breakout, let's say on a weekly chart, I might use 2x the ATR versus 1x ATR, which could be wide as fuck. But it's also keeping me in like an extremely small piker ass size position that it doesn't really matter if it moves against me in a short term frame. Granted, if it starts to work, I'm going to leg into it. But anyways, less is more, smaller size, wider stops. Don't get chopped. We're in a fucking range. It's week 25.
Week 25. Let's fucking go, Nick.
Yeah, come on. Oh, one thing I wanted to mention. Actually, let me back up real quick. Cookie, when I started tearing apart the cues with that, like the idea of the golden ratio, the triangle that I kind of built out was about an 18% move, but over the course of a 30-week time period. So like time period also was roughly about 30 weeks in relation to the golden ratio. Time wise, that came out to about 30 weeks or 30 bars on the weekly. So we're obviously at week 25, and what would have me leaning even more bullish, or if we did head lower from here, I think it's going to be short and violent, similar to the tariff sell-off, rather than something kind of more. I think you had kind of mentioned like something more like a 2 to 3 month build out. I think because after you were on last and you were talking about that time period of, I think it was like late March, what I was looking at was kind of like mid-April is going to be like a major inflection point, whether we like break out to all-time highs or kind of capitulate and put in like a tradable kind of pivot there. I don't know if that makes any sense. I just kind of rambled, but
I think we're actually on a similar page because March isn't far away, right?
Yeah.
Or as far as timing is concerned, I think that we'll get that big move down within 1 month, and then the following month we'll just go sideways,
sideways
sideways or retest the lows, and then so it could all be done within 6 to 8 weeks.
Anyways, less is more.
Cookie, the last word is yours.
Hey, look, I just want to say, because I'm not on StockTwit, so I just want to reach out and say, appreciate that lots of people are interested in what I got to say and what I think. Hang in there, hang tough, because I think the markets aren't easy this year. I think they are very, very difficult. And I'll just give you one tip on how to spot choppy markets, right? Because it will save you time, it will save you trades, it will save you overtrading. Whenever the VIX futures is moving around 4-hour moving averages, you got a shitty day, right? Because the VIX will tend to find support and resistance at the 4-hour 9, 20, and 50 MA. And take a look today. Take a look at how the VIX looks right now, based on those 3 moving averages on the 4-hour time frame. And with that, you'll be able to not only see how likely it is you're going to get a choppy day, but also to be able to see the type of support and resistance in the market you're going to get intraday as well, because the market respects support and resistance in the VIX like nothing else. Right. So I just want to leave that with you because I think it's actionable and something that you can use, and it will probably stop you from overtrading and pulling your hair out.
Well, that basically gives you 2026 in a nutshell on what's happened in the market if you look at that 4-hour on the VIX.
Yep. And that's what we're seeing. Exactly. And even today, I mean, even look at what's happening today and yesterday, it's the same.
Yep. That's a great point. Thank you for the tidbit, Cookie. Hey, thanks everybody for tuning in and watching. We know this is really long, longer than we normally go. We appreciate Cookie coming back so quickly. So we're still going to have you on in March, Cookie. Don't think you're off the hook.
Okay, good. I'm looking forward to it. I always look forward to it. Don't think
you're off the hook. You still owe us a quarterly call. Your contract states quarterly calls. This was pro bono.
Talking about the market.
But thanks everyone for being here. Thanks for tuning in. Do not forget, tomorrow we're on with StockTwits with the Community Rip Live. That's always Wednesday at 1 p.m. We'd appreciate it if you tuned into that tomorrow. We always appreciate viewers and comments. So without further ado, we'll see you there. Take care and see you on Wednesday.
Bye.